promised, joining me now is Jay Woods. He is the Chief Global Strategist at Freedom Capital Markets, and the market just opened. We're up slightly. I'm seeing a lot of green on the screen, Jay.
Yeah, 9 out of 10 days, the S&P 500 has been higher. That's fantastic. We'll see if this streak can continue, and we got a lot of energy in this building with Gap ringing the bell. They really brought it today.
We love that energy. We always love when we have a good crowd like that. But tell me, what's driving the market today?
What's driving the market today is just continued momentum, getting anticipation of what Jay Powell may say tomorrow at Jackson Hole. We look like we're about to get that first rate cut in September 18th. If we do, then that could bode well for the market. The market's anticipating it, so maybe this is a buy the rumor, sell the news event. But right now, momentum continues to be up. It's slowing a little bit, but it's good to end the week on an up note as we wait for Powell's comments tomorrow.
But Gap, it's an iconic retailer. Obviously, I want to talk about the retail sales data that has come out. What would you say the results of that says about the overall health of the consumer?
Well, the consumer's been selective, and they've been picking the Gap lately. The stock has been doing well. I feel like I'm a kid in the 80s again, wearing my little hoodie here. As a Gap consumer my whole life, it's fun to see them come and celebrate the symbol change. But GAP, it just makes sense. It's fantastic. But the retailers have been resilient. We've seen it in the large retailers. We've seen it in some of the smaller retailers like Gap. So I think things are going well despite some negative headwinds out there. For the most part, the consumer remains resilient, and they've been shopping, and we've got our Gap closed today to celebrate. So fun.
And as we're seeing the executive team sign the wall, making their way down from the Bell podium onto the trading floor, when we're going to speak to the team in a little bit, I do want to say that to our viewers, that's what we're getting images of now. But let's talk about Gap stock for a minute. Triple digits, last 12 months, significant growth. This is an iconic moment for them. So what would you say those numbers compared to the overall S&P 500, what does that say?
Well, it says that, one, they've turned things around. It wasn't always smooth sailing. Things are going well. They're getting people back in the stores. I have 3 kids. I know this for a fact. But the trend continues to be up. It's off to a rough start today. But, that's just the dip, a buying opportunity for the long-term investors. At the New York Stock Exchange, we love celebrating companies we've had long relationships with. So this is just another step in the road higher for the Gap. It's fantastic.
And jobs growth experienced its biggest downward spiral, since 2009. So talk to me about this. What impact would you say this has on the consumer and the overall market for that matter?
Yeah, well, that jobs growth number that came out yesterday was a revision, and it was a little wonky. It did not cause the market to go down, so I'm not going to make a lot out of that. But yes, unemployment is ticking higher, but where is it coming from? All-time historical lows. So yes, we will make a bigger deal of it. It is slightly a concern. That's what the Fed is going to address at their next meeting as they saw unemployment tick up. Maybe that rate cut will help stem that tide, but a little tick up from historical lows, to me, as a long-term investor, isn't the end of the world, and nothing I think the market is fearful of at this point in time.
But how do you think all this news is really driving the timing of a rate cut?
Well, it's going to help with the rate cut. I mean, the Fed has a dual mandate. They want to get inflation under control back down to their 2% goal. They can check that box, or 2.6%. We have the PCE number coming out next week that will verify that things are going well. Unemployment was the other part of that dual mandate. They kind of didn't address that until the last meeting. We saw in the Fed minutes yesterday that they talked about it, they were concerned about it, but the unemployment number came out 2 days after their meeting. They should have cut last time. The market got a little jittery. I still think we'll have some jitters, as September seasonally is the worst month of the year. But over the long term, if they make that initial cut, we'll see what happens. The Fed is data dependent, very boring, but one data point at a time. And the data, while the unemployment numbers are softening a little bit, it's not at a concern yet. And hopefully a cut will help assuage some fears.
But I want to talk deeper on this subject. How will the average American feel this rate cut? How will Americans feel it across the board?
Well, across the board, hey, rate cuts are great. It's great for the companies that have to lend and loan at a lower rate. It's great for people shopping for a house, for the mortgage market. We saw mortgages go up to 8% on a 30-year fix. They're now under 7% and slowly decreasing. So that'll get people out and give them more flexibility in how they spend, because they're going to be paying less for that house, for that car. And what will they do? It will help retailers. It will help people go out and spend on some of those discretionary items that maybe they were holding back on.
The next Fed's meeting is in September. Is there anything that could happen from now to that meeting that could impact the decision of rate cuts?
Well, of course, something could always happen. Geopolitical events could throw a monkey wrench into things, but I think when we have them, I know when we have them doing this for 30 years, that a geopolitical event, it will cause angst, it will cause volatility in the markets, but the long-term growth of the economy has been stable, has been steady since we got out of COVID, and I think the Fed has been doing the right things, maybe a little slow to act. We can go down that rabbit hole, but yeah, it seems like the trajectory is there. We are in what I believe is a secular bull market that can last 2 more years, and these bumps, these seasonal headwinds are normal events, but when you live through them, they're not fun. So yeah, there could be a geopolitical event that throws things off. There's going to be a lot of rhetoric with this election. I think there'll be some headlines when they talk about politics over the next few months. Ignore those. Long term, it won't matter. We usually rally end of the year. 2016, 2020, both controversial elections. Guess what happened when the election was over? We rallied strong into the end of the year. I think the setup is there to do it again.
All about that long-term investment. Thank you so much, Jay.
You got it. Thank you.
It's great to have you.